All right, so we're up to week 7. Tonight we're going to talk a little about insurance, auto insurance, and health insurance. We won't talk about life insurance this week. Life insurance is just a different topic, and there's a lot more inputs you can have in life insurance in terms of choices you can make. I guess there's a fair number of choices you can make in terms of auto insurance, but part of it is mandatory. You don't have any choice. You need to have liability insurance to protect others against your actions. Also, after this is finished, be looking for the midterm prep, that separate video, and then get ready for the exam. So there won't be any homework this week, as the primary thing is to get ready for the exam. All right, so auto and homeowners insurance. So again, you can live your life as irresponsibly as you like, but when it starts to affect others, that's where the government, society, everyone else just intervenes and says, okay, yeah, you aren't going to destroy other people's stuff and get away with it. So in auto insurance, obviously, if you hit somebody, that's a big deal. You've affected them. And homeowners insurance, yeah, if you have your own home, and I mean own home as in you own it, not that the bank owns it and you're still paying a mortgage on it. If you're paying a mortgage on it, the bank, they are very interested in making sure that home is still in saleable condition. So technically you own the home, but really they own the home, and they are going to make sure that their interest is protected. A lot of times when I was talking about those mortgage payments the other day, I mentioned your mortgage payment and the fact that there might be certain escrow accounts, things like insurance, the insurance for the property, and also the taxes are often included, which is nice. It just makes things easier for you. But again, the mortgage company isn't doing that just because they're trying to unburden you. No, they're doing that because if the taxes aren't paid and that house gets repossessed, again, in their eyes, it's their house that got repossessed. Or if you don't have proper insurance on it, it burns down and there's nothing left of it, they're not going to be happy. They'll come after you regardless, but they'd be just as happy as if they could just file an insurance claim and be done with it and kick your butt to the curb. So anyway, property insurance ensures damage to your home and auto are covered. Yep, protects your personal assets from liability. So as you try to amass some wealth, hopefully you'll be successful. Well, you're now also going to be a bit of a target. People will be out there. There's some fairly unscrupulous people, and they tend to gravitate to the lawyer field. And whatever, say what you like about them, but there's a certain segment that exists off of finding liability and exploiting it. So it may affect just kind of the way you run your life or certain businesses. There's a number of business proposals that I've had that involve alcohol sales. And tell you the truth, I might be a landlord in one of those sort of situations, but the actual owner operator who's going to take the liability for a business that's involved with people drinking and perhaps doing irresponsible things, it can get pretty ugly. And again, my feeling towards lawyers, one of my best friends is a lawyer, and in fact, I talked to a number of lawyers, and these guys, they like to help me in my type of business because we're doing more or less wholesome business activities, but they were just kind of disgusted by their day-to-day business. These guys were personal injury lawyers, but they couldn't step away from it because they're making so much damn money, and they're down in Anchorage. They were funny about it, and I expressed to him I thought about doing, this one type of business. It was going to be, I guess, a dog park where you could actually have beer out there and music and stuff like that. And these guys are like, oh no, if you do that, we'll be on the other side of the lawsuit and we will be suing you and we will be taking your property and the rest of it. And it has happened. They went through a story about one of their clients, lady, with their friend driving. They hit a moose, and as you do, whose fault is it? Well, it's obviously the moose's fault, probably. Maybe the driver, but in this case, it was the moose just popped out from nowhere, and as moose do, came in, because of their long spindly legs, ended up in the passenger side and hurt the passenger quite severely. Well, so they sued the driver. Was the driver the one at fault? Well, no, but the driver's the one that has the deep pockets. The driver's the one with the insurance, and the legal system is sort of geared to take care of people in terms of you can't sue the moose. The passenger, obviously, they probably had no responsibility, but anyway, they're not going to get sued anyway. They don't have insurance, but that driver has insurance, so the driver gets sued, and things kind of move on. And the same sort of thing. We had an old dive bar just up the road from me out here in the Butte, and a couple kids hit a cable. They were, in all aspects of it, were not even served at this bar, but they needed somebody to pin this crime on. They came in and they went after this little bar and took everything they had. And anyway, so things get really ugly in lawsuits. So liability insurance, you do the best you can, but a lot of times you just have to minimize the risk and minimize your exposure. So anyway, okay, so liability is pay for the damages that you caused or are assessed to you. Primary function and maintain your existing level of wealth. Yeah, you can lose it all. You can certainly lose it all. And but the good news is that you can typically insure against it. But the insurance companies, they're going to look at the nature of what you're doing and what your exposure is, and then assess their premiums, set their premiums based upon that level. So risk. The exposure to the events. So, yeah, if you're doing something with alcohol, there's a tendency for, again, I don't know how we're down this rabbit hole this deep, but that would be viewed as a very risky venture. Anything that's involving that, me potentially making money from that sort of situation. Risk management. How do you get around that? Avoid risks. You avoid risk to the certain extent you can, but you still need to live life. Let's say in a driving or pedestrian type situation, the only way to avoid risk is not to drive or not to go outside. Well, that's not realistic. So you do things to reduce or mitigate risk. You take certain processes. You maybe don't drive like excessively in terms of speed, or you don't drink and drive, or you wear a seatbelt, or you have a vehicle that's substantial enough, or at least has some airbags or whatever to give you some sort of protection to mitigate that risk. You can also accept the risk if it's a certain level. You can again just say, I know there's some risk involved, but I think it's manageable, and I'm going to be sort of self-insured, or at least realize that there's not as much risk. Or you can insure against the risk. This is where you pay somebody else to accept that risk, and the insurance company can make a profitable business by the fact that not everybody's going to have a bad day on the same day. And again, that's their business model. So they'll take premiums from everybody, And say in the whatever in this part of Alaska, if there's 300,000, 500,000 people, there's going to be probably 40, 50 wrecks today. But you look at the numbers out of hundreds of thousands of people, that's not horrendous. And if you're taking money from all those other people, you can as a business, the insurance company can make some money. And they get down in details. Insurance companies have what they call actuarials, people who do a lot of studies, a lot of math, a lot of factors to determine how accidents happen, and they can get it down to some sort of mathematical precision in terms of what their risk is and how they can make money against this. Again, something like flood insurance is not. That's kind of a silly name. It's insurance is this concept that not everybody's going to have a bad day on the same day. Well, with flood insurance, yes, that can happen. Everybody can have a bad day because a flood, a hurricane can take out a huge area. I've got some property down in Florida. I was just talking to my buddy, and I think he said it was a $900 premium per month now that's being assessed for hurricane insurance that may or may not even cover the damage, but it just because the amount of money that the government's having to fork out in these things is just so excessive that people who live in those areas, they're just forcing them to put out that kind of money, and you pay $900 a month, but that's still not a flood insurance policy. As if and you get flooded, you're not going to be covered. You're just paying into a general. I mean, it's just screwy. But that's the nature of living in a place where things can get so expensive, and everybody they can just get devastated by natural disasters. Economic decisions, yeah, they always want to cover this. It's again, we don't quite control this. Types of insurance. So property, casualty, life insurance, health insurance. So like I said, we'll talk about life insurance on another segment, just sort of a preview, is you don't always need life insurance. There's certain times in your life where you need it, and there's certain times when you don't. If you're young and you don't have any dependent on you, absolutely you don't need life insurance. And if you're old and you've got a big nest egg, you don't need life insurance either. You've got enough money in the bank, and insurance when you're older gets unaffordable, gets really expensive. So anyway, there's some strategies to life insurance. But property and casualty insurance, you typically need that throughout the course of your life. Insurance companies and premiums, so I touched on that. Yep, different things. So car repairs, medical. The medical and the liability can really get out of control. Home insurance. The medical is kind of the great unknown, though, because that can be, especially when it gets into disability where you're messed up for a long time or permanently. Assessing those numbers can be huge. Insurance agents, typically you need a person in the loop. You can do some things online, but depends on the state. State insurance is typically managed by each state, so the rules may vary, but there's usually some sort of commission salesperson involved. Again, as I mentioned, I prefer to go without a state insurers just because I went with a local agent, and I found that they were kind of intrusive. I'd rather just pay my premium, and I don't want to have I don't need a Christmas card. I don't need a personal relationship. I just need them to be there when I file a claim. Other than that, we got other stuff going on. Auto insurance. So cost has increased. I guess I kind of highlighted that. Again, these guys were the best guys ever, two lawyers down in Anchorage. I won't mention them by name, but they were just they just sort of felt dirty based upon what they were doing, and you know, it's kind of sad. Now, if you're truly hurt and somebody is truly careless, yeah, that can happen. But and I'm sure they enjoy their work in those situations more than they do when they're just going after somebody who just because they have to support their client. So when you get an insurance policy, yeah, that is a contract between you and the policyholder. You agree, you agree to give them a premium, they agree to give you coverage. And so, again, they've got their formulas that are all figured out, so they're going to make a bit of money. But those formulas are all based upon, you know, particular factors, that vehicle, your driving record, the rest of it. So if some of that information, if you've provided some bogus information, they're going to look for ways not to pay because you were dishonest with them and you screwed up their little calculation. Bodily injury. So when you go through auto insurance, it's quoted in a series of numbers. I'll show you here in a second. But, you know, you have the injury, you know, the damage to the vehicles and stuff, and then you have the medical, and then you have the combined damage. They're quoted in this way, so always in a series of 3 numbers per person, and then for everybody, and then for the property damage. So you can see 50 grand in property damage. You can total out a car quite easily, and obviously a single car could be way more than 50 grand. So if you go beyond these limits, so if you get the lowest policy, you may still have exposure because you have to cover when these numbers are exceeded. So you may think, oh, I'm getting great insurance and I'm, you know, I've got just going with the absolute minimums, and then you find out, I really wish I would have had a bit more coverage. Yep, so the medical payments. So here are the different states. Alaska, for example, 50,000 bodily injury per person is the minimum, and then per accident. So they're just saying maybe 2 people. So again, you can 25,000, half a car in a lot of cases. I mean, hell, that's my whole fleet of cars in my situation. But for most of you, you probably have different vehicles. But each state has their own rules. But you can see the minimums are typically quite low. You know, even a place like California, $5,000, that's quite low. You're going to need a little bit more than the minimums. Just to round out the rest of the states. All 50 states. Okay. And uninsured, underinsured. This whole notion of, oh yeah, people must have insurance. I'm telling you, people must have insurance, but that's not the society we really live in. What do they call it? We live in anarchic tyranny where certain laws are enforced. If you have a bit of money and you're a responsible person, I'll expect the laws against you to be enforced at 100%. But if you're kind of a deadbeat, you know, let's say murders, for example, in some states the solve rate is 16% or something, you know, foolish. But, oh, by the way, don't pay a parking ticket. Those things are enforced to 100%. get a speeding ticket, you're paying that speeding ticket. There is no, that prosecution is 100%. Shoplifting, yeah, so anyway, the way society works, you will find a lot of people on the lower tiers not insured. But oh, by the way, if you try to do that, you're going to jail. Collision, comprehensive. So this is when you caused the thing. And again, this is going to be kind of tough to get out from under. People are looking at this stuff after the fact, and especially with winter driving up here, oh, you slid into the guardrail. Well, the road was completely iced over. There was absolutely nothing. I had good tires. I even had studs, whatever, and it still happened. Their answer is going to be, yeah, you were going too fast for conditions. End of story. You're at fault. So, deductible. Deductible is the amount you pay, right, before the insurance company kicks in. So if you want to have perhaps, better coverage for cheaper, better in terms of higher limits, but you still want to make it affordable, you might consider raising your deductible. I've had $1,000 deductible on most of my policies. It means if I get in an accident, it's going to cost me $1,000. But if you're willing to do that, then perhaps you can have a lower monthly payment. The other notion is, let's say you have a $200 or $250 deductible. So if you get in an accident, you only have to come up with that smaller amount. But if you file more claims, because now I've only got the lower deductible, guess what? The insurance company's going to raise your rates. If you start filing claims, they raise your rates. So in essence, you're going to be spending more than just that $250 anyway. So anyway, I generally go with $1,000 deductible, and I don't file a whole lot of claims. Paying in the policies, yeah. Cover claims, lawyer fees. So, damage your own car's collision, the medical, bodily injury, property damage, and comprehensive is kind of everything else. Damage your car, theft, vandalism, non-accidental events. Funny thing, I think terrorism, at least on all my liability policies, I don't take the extra option for terrorism. I don't know. If Antifa, now that they're like a terrorist organization, if they somehow had a beef with me and came and tore up my stuff, I don't know. I don't know how that would work. I don't think we've got too many Antifa folks up here, so I'm not too worried about it. Characteristics of your car. So the value of the car, certainly, and also the repairability. And again, I guess there may be some imminent technology in electric vehicles that may eliminate some of the battery issues, some technology. Maybe they'll reach a certain maturity. But anyway, the problem with electric vehicles is, there's a number of problems. But one of them has to do with the repairability. And I don't know. I've never tried to insure an electric vehicle, but I think it might be a little eye-watering. Your age, for some reason, this magic age of 25 is what they're kind of interested in. Yeah, mileage, how much you actually drive. If you have a couple vehicles, if you say, oh, I only have one vehicle and I only drive 5,000 a year, they're probably going to call BS on that. Your driving records, certainly. Yeah, if you've had a few accidents, tickets, stuff like that, it's going to go up. Gender, too. Location, driver training, school performance. So they can reach back into all sorts of weird things. If they can determine a correlation, between, hey, A students don't get in as many accidents. I'm not saying that's the case, but anything they can find a correlation with and extract out of your profile, it may affect the rates. Lots of ways to get different quotes. Again, you have to shop around a bit. Yeah, sometimes it just depends. I mean, Alaska, again, is a smaller market. You may have some companies who just don't do business up here, especially online. Different states, some of it's attributable to the litigation. Some of it's attributable just to different factors in terms of repair costs and the rest of it. But yeah, the insurance amounts across states can vary greatly. Homeowners insurance. So I think we talked about auto insurance. Something that's unique that came up. I was traveling. I was on the road a few weeks ago. And I'm not going to go too much into the details, but rental car, worst case scenario, it wasn't that damaged, but yeah, the fender got crushed a bit because I used the credit card I did. They actually covered it. The collision damage waiver is covered by the credit card. I did not opt for the rental car insurance policy. If I had opted, I would have lost the credit card coverage. So I'm not sure how it's all going to work out. I mean, theoretically, this could work out amazingly because there is no deductible, and I do know it's going to go into the insurance database with a vehicle I had control of was. And it was actually parked when it happened, so I don't know. I think it may find its way back to my insurance records, but in the short run, it's like I won the lottery. I was bumming there for a while because I knew I hadn't taken the optional insurance for the rental car, because they'd love to get you to take that because it's $15-20 a day. I didn't do that, and. But I think because of the credit card, and again, there was some tense moments where I found out whether the credit card I used actually covered it, which it did. I was stoked. And anyway, I don't think there's going to be a deductible to be paid, and I think the problem's more or less going to go away. We'll see. Famous last words. It's only happened about a week ago, so we'll see. Homeowners insurance. So these are things that happen to your home. Again, I'm not one to file a bunch of claims. Obviously, the most common thing you would think about here is probably fire. I guess burglary could happen to a certain extent, but yeah. From a mortgage perspective, they're most concerned about something that's going to take out the structure. They have different categories, not a whole lot for you, but there's different types of insurance. Renters, you probably should get that. It's fairly inexpensive, protects your items. A lot of times landlords will insist upon it because it does typically have a liability component to it. Condominium, special products for you. Trailer if you're in that situation. But this other thing about cash value versus replacement value, when you have a policy, ideally, if you can afford it, you want the replacement cost. Let's say there's a fire, and fire department comes in, does a great job. They put out the fire in minutes, but guess what? In the process, everything you got is water damaged. Everything you got is smoke damage. So you file the claim with the insurance company, and they say, you say, oh, my entire wardrobe, which, granted, there's a pretty big window between your wardrobe, my wardrobe, and, I realize everybody's different, but anyway, the clothes are expensive, but used clothes are not worth anything, and so there's, my entire closet's gone, okay, yeah, here's $200. What? Well, yeah, that's like thrift store value. All your clothes were used. You're going to have to replace them with new stuff unless you're going to go, rummage thrift shops or something. So anyway, you can see how having the replacement cost is going to make your life a lot better. So if you can afford it, if you're getting a super low ball price on homeowners insurance, but normally I don't know. It just doesn't seem like people don't shop quite as much for homeowners insurance. You kind of get what you get, but you definitely want to read the fine print. And again, if you do have specific items in a certain category, you want to make sure you've got coverage for that. Again, the personal property floater, the addendum, the codicil, whatever you want to call it. Make sure if you've got a whole bunch of jewelry or photography or whatever, make sure that's identified. It helps to have perhaps a video or something of all your stuff, somewhere on a memory stick or a CD or something, so you can kind of reconstruct what you had and make your claim a little bit more, not only easier to do, but certainly more complete. So this personal property floater, home office, if you went that route. General liability. I've got just a general liability policy, just because, again, I wouldn't say I'm paranoid, but I'm definitely exposed to some of the stuff. Now, again, like, I've got some raw land, and as long as I don't make an improvement to it, if somebody happens to, be on my property and hit a tree, well, that's on them. I didn't do that. But if I were to say, oh, I don't want people running across the property, I'm going to put a nice, 1/2 or 3/8 inch cable stringing across the trail, and somebody, beheads themselves, ooh, that's not going to go well. So if you start taking provisions that are semi irresponsible, you could find your liability greatly increased by what they would call negligence, things that you're actually doing that are above and beyond. If you've got, it's not so prevalent up here, but if you had a swimming pool and you don't have a fence around it, you put in the swimming pool, which they would, in legal terms, call an attractive nuisance. People are going to try, and kids are going to be attracted to that. And then you don't have a fence. Yeah, now you're negligent. So you can make things much worse for yourself. Factors that affect your insurance: value of the home, obviously, the deductible, location, degree of protection, discounts. So yeah, location, like, is in how close to the fire department, other things. Now, insurance companies, I've caught them doing, again, it was this local agent, and they were just, golly, they just were like micromanaging and trying to scam me on stuff, and I called them out on it a couple times. I had a home, and they said, well, that home's worth $500,000, and you only have it, insured for $300,000, and so that's not enough, obviously. Well, they're lying. What happens is, let's say there is a fire to the property. Is the land damaged? No. When they say the home's worth $500,000, the dirt was, the lot itself was probably worth a couple $100,000. And so the structure is what they're going to have to rebuild. The structure's worth about $300,000. So I had the appropriate amount of insurance. And yeah, they didn't fight it when I told them, no, it's got the right amount of insurance. So again, they're looking for low-hanging fruit. They'll try and get you to overinsure if they can, whatever. They're only going to build a single house. If you have extra insurance, they're still going to do the minimum. They just wanted a bit more. So, yeah, you can tell with the Oklahoma, lots of tornadoes.
Are those tornadoes? Yeah, not hurricanes. Idaho, not a whole lot of natural disasters going on. Florida, all kinds of stuff. Florida's probably even higher now. And that gets you back because you kind of cross the line here. When you have, let's say you have an EV, electric vehicle, and it's in your garage, and when those things catch fire or get wet, anyway, things change. Strategies to reduce your home. So increase your deductible again. You can do that with auto. You can do that with home. Improve the protection. Sometimes when you bundle the insurance, or if you're switching insurance companies sometimes. Anyway, you need to look at the factors. It's not hard to compare rates. But homeowners insurance, I want to say it's maybe a 100, 200 a month. So when you go to do your taxes, you deduct your, especially if it's like a rental property, you deduct the taxes and the insurance as expenses. So that's why I'm kind of familiar with that right now. And I think rental house, I think the insurance on is about $1,800 a month, or $1,800 a year, sorry. Talked about renter's insurance. Good idea to have. And landlords sometimes will make it mandatory because there's typically a liability insurance. And so if something were to happen and they can go after your policy before going after the landlord's policy, they will. And so this umbrella policy, if you start to get some money and you're like, I don't know, how I'm going to get sued here. I just don't want my assets taken. I don't care whether it's a vehicle or a home or whatever. I need some protection here. And you can get a general umbrella policy for not a huge amount of money. I mean, it all adds up, but you can get one that's just specifically not tied to any particular activity, just protects you as and the other notion is this umbrella. There are some scammers in the insurance business that you really have to be careful. They'll have like cancer insurance or something, and usually it's a very inexpensive policy to you. That it's inexpensive because it'll never ever pay. You would have to get this one particular type of cancer, and it'd have to be isolated, and they know that that's just not going to happen. So they'll sell that stuff through high pressure tactics, knowing that it's you want the most broad. You want in homeowners insurance, they would call it all perils. In terms of if you had an insurance that said, oh yeah, we're going to issue a policy for wind damage, and all of a sudden, there's a big storm and your fence is blown down, but they're going to say, well, yeah, it was actually weakened by the rain, and so that other factor, that was, there was some other peril that caused that. It wasn't just the wind, and you, from your perspective, your fence is gone. You want it replaced. You don't care what caused it, whether it was wind or hail or whatever. The fence is gone. Replace it. So you want the umbrella. Health and disability insurance. This section is going to go pretty fast because it's a pretty dark subject. It's everything's in transition right now. And it's probably going to stay in transition. I mean, even right now, as of today, I guess the government's still shut down over some sort of health insurance thing. Now, again, is there any honesty in this argument? No, not really on either side. But people know that voters are very concerned with health insurance, so it's a great political issue. And the last thing you want to do in a political issue is solve it, because if you do that, then you can't go back to the well. You can't motivate people to do it. It's whatever. Not to get political, but like, let's say abortion in the United States. It's still a controversial issue on both sides. In the UK, it's not. In the UK, they put it to a vote a long time ago, and they decided which way they're going to go with it, and it's settled. It's done. In the States, no, they'll never give that up. Put it to a vote or something like that. No, then the different people can come in from different sides to politic for either side. The same thing with healthcare. Is the plan that's out there now good? No. Does anybody like it? No. But it gives politicians something to be on either side of. The only thing that mitigates the healthcare situation in the States is the fact that most people, nearly 50, well, most in terms of one segment, get their coverage through their employer. So, not a perfect situation. Sometimes you keep a job you don't like because you need the insurance. So then you get Medicare. So these are the elderly. Medicaid. This is more of a welfare type thing. Medicaid, again, for children. Now this Affordable Care Act, other, just pretty small. The premiums are kind of high, to tell you the truth. And then other. And then they're going to make a big deal out of the uninsured. Well, obviously it's the LA Times. They've got a certain agenda here, but I'm not saying there aren't uninsured people, but what you'll find in insurance is, because of the nature of it, and if you really are somebody that has some wealth, I'm not saying this is the majority is 9 people, but there's probably 1% or 2 out of this group that are like, screw it, I'll be self-insured. I'll be a cash payer. If something bad happens, I go to the hospital and I just pay for it out of pocket. If you do that and you talk to the doctors beforehand, your expenses, the actual cost per procedure are about 1/4 of what they'd be for somebody coming in off the street putting on insurance. The doctor kind of ends up with the same amount of money, because by the time you go through the whole billing process, and say you're billing through Medicaid, they don't pay 100%. They're going to reimburse the doctor at some percentage, and so the doctor can make the same amount of money by just taking cash and charging a lower rate. And then sometimes, and this is the contentious part right now, is people that aren't citizens, the level of benefits they get, and are they the total U.S. population, or is this a total U.S. citizen, or whatever. I'm not going there, but what the takeaway from this slide is, when you're going to work for an employer, the presence of health care coverage is a valuable perk. And the fact that they say, they're going to get rid of the Affordable Care Act, this is also, pejoratively called Obamacare or whatever. It's not going to affect that many people. I mean, we're talking about 3% of the people. So, not that they're going to eliminate it, but if they did, it would affect a pretty small number of people. A lot of people who apply for Affordable Care Act, because of the premiums involved, they can't even pay that. They end up in the Medicaid type thing. Affordable Care Act is supposed to be, self-funded, so the premiums in here are pretty high. So, health insurance, private companies, and again, Luigi Mangione and the rest of that. I mean, the business, there's enough blame to go around, but I'm just telling you that nobody likes the current system, and that's kind of by design. It's a great political issue to motivate voters to get out there and, you know, rally for the other side. And it's sad, but that's where it is. From a personal finance perspective, health insurance is, you know, it's the ruin of a lot of people. Catastrophic illness. Now, unfortunately, that's one of the things that the Affordable Care Act got rid of. There used to be a notion of you could get an insurance policy that just covered catastrophic illness, which was perfect for young people. Get that, and you know, it's inexpensive because it just takes care of things like some sort of extensive medical stay, which, again, if you're young and healthy, probably not going to happen. But when you do all these other things, it can get quite expensive. The other problem with talking about insurance and medical insurance, it's the term insurance it's not even applicable in a lot of cases. Especially, let's say, for example, and this is very controversial, to say pre-existing conditions. Well, let's say that concept transferred over to automobiles, and you said, oh, okay, I wanna, you know, get my bitchin' Camaro, you know, I'm gonna get this thing insured, and they're like, well, what year is it? Well, it's I crashed it. It's already in the shop. Well, wait a minute, you're trying to get insurance for a vehicle that's already damaged? Yeah, it's got a pre-existing condition. It's damaged already. Well, you know, the insurance company's going to go, this isn't insurance. We can't, you know, we're insuring against risk. We're not insuring against certainty here. So, if you wanted to have true insurance, you would need to have a carve out and take pre-existing conditions out of the insurance pool and make them paid by a different pot of money to try and finance pre-existing conditions through a normal insurance model. You can't get there from here. So you have to, anyway, it's say what you want, but that's not insurance. So anyway, large wealthy countries spend about half as much as the U.S. So again, litigation, medical costs, all the rest of it. There's a lot of things we do in the United States that are great, and there's some things not so much. But just the rates, and I've lived in Europe, but again, I had a Dutch friend. His wife had cancer, and it wasn't looking good. But she was young, and in the States, I think they would have tried some more things with her. They sent her home with some magnets. Said, yeah, good luck with this. Here's some pills and some magnets, and we're not spending money on this. And anyway, so they're I don't know. The other thing about the United States is, we spend twice as much on health care, but half as much on food. A lot of these people eat pretty well in terms of healthy, less crappy food, and anyway, obesity rates are probably accounting for some of this as well. Cost of health insurance: 1 in 5 workers is uninsured. Yeah. Workers, again, now they're crossing from population to workers. Anyway, 1 in 5 of the population is uninsured. Some people are transition, some people are self-insured, and there are some that are legitimately uninsured. So, pissed everybody off my pre-existing conditions, but again, it doesn't fit in the insurance model. So I'm not saying those people, need to be thrown to the curb, but you can't expect That's what's happened in the Affordable Care Act. When you tried to fund pre-existing conditions, you spread it out amongst the insurance pool. It's no longer an insurance pool. You're going to you're going to collapse the program, making it unaffordable for everybody by taking what might be perhaps the actual government's responsibility to take care of some of those conditions. I don't know, but it's not going to happen through the private insurance scheme. Pregnancy, dental insurance, vision insurance. Vision insurance is kind of, it does provide some hope. And the fact that laser surgery and other things like that are quite inexpensive. And it's a very competitive marketplace. And it's fairly efficient. There's fairly good value that doesn't extend back into regular health insurance, but maybe it could if the model was more like that. A lot of things can affect it. Yeah. Co-insurance, coordination of benefits, deductibles. Again, deductibles always a factor. They do have some medical savings accounts, flexible spending accounts. You have to look at your situation. In terms of tax deductibility, medical expenses are not deductible until they exceed 10% of your income. So, unfortunately, you got to be pretty sick. If you're making $100,000, before you can even begin to deduct medical expenses, they would have to exceed $10,000. Medicare, so these are people over 65. We're not going to spend a whole lot of time because most of you aren't anywhere close to this level. Age, and it will change by then. Yeah, there are some policies small supplemental policies. Again, Medicaid. Affordable Care Act. They're going to emphasize the positive aspects of it. But again, the program is still roughly around 3%. Quite expensive for those who have it. It didn't really change things that much. Long-term care insurance, this can get ridiculously expensive. The good/bad news is that most people don't find themselves in a long-term care situation for too awful long. They made a big deal out of it during COVID that, what was it? Over 50% of the nursing home patients died within 6 months. Well, unfortunately, that statistic has been out there before and will continue to be after. If you end up in that sort of situation, people in nursing homes don't tend to live very long. Personally, I told you my feelings on it. I'm very comfortable going to foreign countries, and I will do so in a heartbeat. I talked to a gentleman down in Belize who they've got his wife's mother's in a long-term situation down there. She's got her own house, her own caregiver, and they do so for 1/8 the cost of the United States, and that sounds good to me. Everybody wins in that sort of situation. There's plenty of, especially down in Central America or other places that I enjoy, and I'm not going to, bankrupt my children for a situation that's kind of under my control. But anyway, for a lot of you too, for retirement, there's going to be a lot of Americans that are sort of faced with this situation. I'm trying to motivate people to put away money for retirement so that you can retire at some point. And life happens to a lot of people, and they don't end up with the retirement savings they need, and they aren't going to be able to enjoy that sort of lifestyle, at least in the United States. So having, connections or familiarity with other low income countries where your money can go quite a bit farther is not a bad thing. So anyway, but you're seeing some people do that now out of necessity, that are getting to be retirement age and realizing they don't really even have enough money to retire at all unless they go to some place with an exceedingly low cost of living. Long-term care insurance, so types of services, coverage. Yeah, it's quite involved. If you are looking at getting some sort of long-term care, and you wait until you actually need it to try to get some insurance, it's going to be unobtainable. So it's a decision you have to make early in life if that's what you're looking for. But again, the way this works in most cases is somebody ends up in this situation, and they typically lose their home that's going to be used to pay for the nursing home, and it can just get quite ugly because the costs are, in today's expenses are probably around $10,000 to $12,000 per month. It's just, and regardless of how much money you got, it's going to get expensive, and its quality of life is not quite there. It is insurable. Look at the policies, decide whether it's right for you, or at least address it and come up with a different plan. Your family's history, well, guess what? The insurance company's also going to ask for your family's history. And so if you look like somebody who's actually going to be, if both of your parents required this type of thing, if there's some sort of dementia that runs in the family, something like that, again, it's better to confront that situation now when you're young and you still have the option for insurance, or maybe you can get a commitment. But if you start to develop some sort of symptoms or you get older, it's going to be very, very difficult. Disability insurance. Most of the time, there's some sort of state disability insurance that's covered. This is why if you've ever been injured on the job or injured in general, people always want to know, did it happen on the workplace or did it happen on your personal time? Generally, if it happens in the workplace, it's going to work out more favorable to you. If you do have a disability claim, and let's say you even take out some private disability insurance, there's going to be a definition done here between, when they say, okay, we're going to give you a certain amount of money because you can no longer work. Well, let's say you were a roofer and you fell off the roof, and you're now injured to the extent where you're never going to be able to, be a roofer again. Well, that would be an own occupation. You would start getting payments. But if your policy was just any occupation, say, well, no, we're not going to pay because, you can't be a roofer anymore, but you can be you can learn to code. You can do something else, and you can work in an office. So, no money for you. So anyway, you'd want to know what you're signing up for in terms of your policy. So the individual, you can certainly get it. The employer may have some, and then Social Security and workman's compensation. So. Percentage or dollar figure, probationary period, yep. before, a certain period before the policy goes into effect. They're trying to weed out people who might have, injured themselves or trying to get some insurance really quick before the, symptoms start to show. Waiting period, length of time for disability. I actually had some disability insurance, and I was going to be down for a fairly significant medical procedure, and found out that, these guys weren't paying, not going to pay, never paid, and I felt kind of stupid because I should have investigated this company. It came through the company I was working with, but obviously they didn't do any due diligence. They didn't know anything about the company they were working with, and it was a scam. And then on to the midterm exam. So wait for that lecture I guess it's a lecture video to appear. On Blackboard, no proctor, 40 questions, multiple choice, 60 minutes. Watch the video. And there's not much math in there. Don't worry about that. You'll be just fine. So, just little word problems. If you wanted to use your phone or something like that to use the calculator, that's fine. The time limit's such that you're not going to be doing open book, because you're not going to be looking stuff up, because you'd run out of time and the test will close and you'll get frustrated. So, good luck on the test.